Welcome to Crypto Fitness. I'm Jay. If you like gains, subscribe, share, and comment down below what your favorite crypto is and what you like to do to keep your body and your mind at peak performance and peak gains. That being said, I wanted to jump into the Bitcoin chart and give just some updates here, and really unfortunately, some bearish signals that I'm seeing here on the charts and with the data. So let's go ahead and jump in. And if you want to learn how to understand market cipher, or you want to learn how to trade if you're new to trading, or you're new to crypto, or if you want to take your crypto trading to the next level, you can get on my waitlist for my course, Crypto Trading Secrets. Link will be in the description below. But that being said, there's some things I want to show you. And first off, this is the weekly chart for Bitcoin. And the first thing that I want to say is that right now, if we zoom in here, it's looking like we are closing, maybe potentially closing or wicking down or candle bodying down past this 50-day weekly EMA ribbon. We obviously hit 29K, 28K. The last day, it's wicked down there, you can see, and obviously this is flipped bearish on the weekly chart. If we go to the monthly chart, I mean, obviously we've got a red candle. The one saving grace here is that on the weekly time frame, it looks like we are coming closer and closer to the -60 line on market cipher B, but we are getting some bearish signals here on the DBSI. We've got a 10 over a 1 here on the DBSI. And recently, there have been a few articles that have come out, especially there's from one in particular from Robert Kiyosaki, author of Rich Dad Poor Dad, and he is targeting $24,000 as an entry point to long Bitcoin or to buy Bitcoin. And I think where he's getting that from is this 100-day weekly EMA ribbon is down here at 24,300, but also the $25,000 level is a big psychological level for Bitcoin. So, and by that time, I mean, you could see that the 100 weekly EMA ribbon is very close to 25K. And by the time, if it does indeed go down to that level, by the time that could happen, it's looking like the 100-day EMA could be around 25K. So I would, in my opinion, I think 25K is a great position to buy back into the market or buy back into Bitcoin, especially with the momentum oscillator coming down close to this -60 line. Once this rounds out and starts curving back to the upside, hopefully, we could see maybe that point. You can see the VWAP on the weekly time frame is starting to flatten out, but this could go either way. I mean, we could go up, we could also curve back to the downside. We've got some pretty hard downward pressure right now. On the monthly time frame, there is a red dot on the momentum oscillator, and it's just getting started, it looks like. As well as obviously the RSIs are overbought here still, and they are currently around the 50 line. So they just broke the positive 60 line here on market cipher B. So they look like they could be headed more to the downside. Obviously, money flow is starting to go curve to the downside also, but it's pretty thick in the green, so this may not come down into the red. Who knows? But by the time this hits, if this does hit 25K, I don't think that the money flow wave will be in the red. I think it'll still be coming down. Could flatten out and head to the upside. We don't know, but as of right now, this is the data we have to go off of. Now, if we zoom in a little bit more, if we come down here to the 2-day chart, things look a little more bearish, in my opinion. We can see that the 200 or the 20-day EMA ribbon has just crossed the 100-day EMA ribbon. So that is a potential bearish death cross there that happened on the 18th of June, where it actually broke the 102-day EMA ribbon. So that's potentially bearish. And then you can see that after that happened, we had this big dump. Right? I mean, that's pretty indicative that things are getting bearish, as well as we're obviously in a bearish pattern on the market cipher A ribbon. And it looks like we're trying to hold the 202-day EMA ribbon, but looks like the candle body right now is still below it. Could go back up, but it could also come down. I mean, we've got a 17 on the DBSI here over a -5 on the 2-day chart. So not necessarily looking good. I mean, 17 is pretty strong. We had a 16 before, and then now a 17 on this new candle. So, I mean, that's relatively bearish, as well as where it looks like we are currently breaking the 200-day, 2-day EMA. And then obviously the momentum oscillator, we've got a red dot. It is coming to the downside. VWAP is coming down. And money flow on the 2-day chart is, look, I mean, it's pretty heavily coming down into the red, it looks like. So that is obviously, these are a lot of bearish signals that we could see more blood in the short term and medium, possibly even the medium term. And in the 2-day chart, or in the daily chart, I did track a inverse head and shoulders that potentially could play out. Now, there is some bullish action here. And that bullish action, potential action, is a potential bullish divergence. And we can see on the daily time here, we've got a green dot and a low here on the momentum oscillator on the daily time frame. And potentially, I mean, we obviously have to see where this momentum oscillator plays out, because obviously it looks pretty sharp to the downside. We could come past this previous low, right? And that would kind of negate this bullish divergence. But it could also maybe start curving. I mean, the VWAP looks like it's curving right now. So if this can curve to the upside and go past the zero line, and if we can see some action towards the upside into this, we can see this momentum oscillator start to curve and flatten out potentially. We could potentially see a bullish divergence, maybe something like this, right, where we have a higher high in the momentum oscillator and lower lows in the price action. Now, the thing with bullish divergences in a bearish trend, as we're currently in, is you never know when it's going to actually play out, when it actually goes sideways or, you know, potentially to the upside. I mean, this could be a smaller bullish divergence, or smaller bullish divergence, and this could end up playing out bigger. You know, this could drop more and we see a bigger bullish divergence eventually. But the idea is, you know, obviously, hopefully we can get a bounce here and see some positive moves to the upside. And if we zoom in even more, so if we come in even more to like the 12-hour chart, you can see it's wicked down. And if we come over here to my other chart, that was my Bitstamp chart. This is my Coinbase chart. If we come here to the daily time frame on the Coinbase chart, I mean, you can clearly see my spider lines here. We are holding, these spider lines are pretty strong. I mean, this middle spider line here, we held here on May 19th at approximately 30,000. We hit it again at June 8th at about 31,000. And we did wick below it, so we did make a lower low, which is obviously not a good sign. But you can see this lower spider line we have been holding. And as well as this previous low, we can see that I tracked this previous low on this Fibonacci. We hit this low earlier in the year on January 22nd, and also we hit that exact same Fibonacci level, and currently we've bounced. Now, we've obviously broke 30K, and 30K is a pretty big psychological level, and that's where this spider line is. If we zoom in here, we can see that this spider line was the 30K spider line down here. And so I mean, obviously we wicked down, so I mean, hopefully this holds. But the thing is we did break it, and we did come down here to 28,000, about 800 on the Coinbase chart. And typically when you break that resistance, I mean, that it kind of opens the floodgates for it to come down further. So that's something to keep in mind. However, if you want to make the bullish case, I mean, you can make the bullish case here that, oh, look, we came back down here. That's the low, the previous low back in January of this year. And we came down and wicked to it. And this could be the low point. Maybe this is where we bounce. And maybe this is where we start seeing some bullish action. And we start seeing that bullish divergence play out, right? You can see it here on the Coinbase chart. We potentially have a bullish divergence here where the price action is going lower. The momentum oscillators are gaining strength. So that is potentially, hopefully, a good sign. But obviously, these are some bearish signals to keep an eye out for. And if we come back here to my Bitstamp chart, Obviously, we want things to go up for Bitcoin, but we have to look at the technicals. We got to look at the data to make sure that we are trading logically, reasonably, and based off data and not emotion. So when we want Bitcoin to go up, but we've got to look at the data. Now, if we come to the 2-hour chart, I mean, obviously, and the 4-hour chart, even the 6-hour chart, I think, is looking relatively bullish. I mean, you can see we've got a quad green dot here on Market Cipher B. Money flow is thick in the red. It does look like it's coming down still, maybe flattening. RSIs are still overbought, but we can see we did come below the 25 line, so that is good. And in the immediate short term, you can see this massive wick. I mean, that is a pretty massive wick on the 6-hour chart, and we have a 21 here on the DBSI for the bulls. So this is potentially bullish, as well as obviously all these green dots here. We could see a short move to the upside maybe, and if we come down to the 4-hour chart, obviously we are in a massive bullish divergence here on the 4-hour chart. You can see lower lows in the price action and gaining strength in the momentum oscillators. Same thing with the 3-hour chart. Obviously 22 on the DBSI, 17 on the DBSI here. Confirmed green dot here on the 3-hour chart. Money flow wave does look like it's could be at a low. VWAP is coming up. RSIs are oversold now on the 3-hour chart. On the 2-hour chart, same type of thing, gaining strength in the momentum oscillators, as well as the price action is dipping on the price action. So that is bullish divergence, as well as oversold RSIs. Money flow is very thick in the red, and it looks like it's actually starting to curve to the upside on the 2-hour chart. On the 1-hour chart, it does actually look like it is starting to curve to the upside as well on the 1 hour. You can see the bullish divergence playing out here. Lower lows price action, higher lows in the momentum oscillators. So that's the bullish case in the short term. That being said, we could come up here maybe to the daily time frame, right? And if we come back to the daily, if this indeed does play out, I mean, obviously, the thing we want to look out for right now, the other thing I want to show you that's potentially bearish, and this bullish divergence could play out and we could still be bearish. That's very, very key. It's very possible. You can see that we're down here at about 32,000 right now for Bitcoin. We could come up here, this bullish divergence could play out, and we could come up here and test this 200-day EMA ribbon and 50-day EMA ribbon. You can see this is the other bearish thing that I wanted to show you, is that, look, the 50-day EMA ribbon and the 200-day EMA ribbon are literally about to cross right now. This is a death cross as of right now. I mean, that's not very bullish in my opinion. I mean, they haven't crossed yet, but they're very, very close. And the only way for these not to cross would have to be for, let me get rid of this little circle here, would have to be for Bitcoin to rally and break the 200-day EMA ribbon really before, I mean, these are about to literally, these are imminent to cross within the next, I would say, the next day. For sure in the next day, these are going to touch, if not cross. So Bitcoin would have to literally come up here approximately 30% and even break that past 30%. And I just, in my opinion, I don't think that's very realistic. Now, the other bearish case that I want to show you is looking at the traditional markets. And in my opinion, the traditional markets are not looking very good right now. We can see here, if we look at the S&P 500, we can see this broadening wedge that we've been in. This is the monthly chart, okay? And we can see that in 2018, we had a small dump. Again in 2018, in 2019, we had another small dump, relatively small. I mean, that's like what, 15% for the traditional markets. That's pretty big. Obviously, we've got the Corona dump right here in March of 2020, and that was a massive 35% correction in the traditional markets. But look how overextended we are in the S&P 500. I mean, look. Obviously, we did break some previous support or previous resistance, but that being said, I mean, I don't think these are necessarily going to hold. And I'm on a hike in Ashi candles right now. If we switch to regular candles, look at this. Look at this. We have a red dot appearing here on Market Cipher B. The money flow is thick in the green. The VWAP is flirting with the zero line right now. It looks like it could be coming down. RSIs are overbought, very, very overbought. I mean, you can see they've been overbought since April of 2013. On top of that, we have not had a major correction in the traditional markets since January of, well, obviously like the 2008 bubble. And if we go previous to that, you can see the dot-com bubble back here in 2000, early 2000s. And you can see we've just been, the dot-com bubble touched the 200 monthly EMA ribbon, and the 2008 broke the 200-month EMA ribbon. And since that time, we literally have not seen a touch to the 200 weekly EMA ribbon at all, or even close to it. So we are due for a major market correction here, in my opinion, as well as we're getting classic bearish signals to get out of the market. You can see the red dot here on the monthly time frame, and each red dot that's previously, like, look at this red dot, that's when the Corona dump happened. This previous red dot to that happened in September, October of 2018. You can see we got a correction. So these red dots are pretty, on Market Cipher B, are pretty reliable in my opinion. And look how overextended we are. I mean, we're so overextended. We haven't really seen very much red, and if we go back to Heiken Ashi candles, we haven't seen any red candles on Heiken Ashi since the Corona dump. So we're very, very overextended. And if we go off this broadening wedge that we've been in here, you can see previous support here. It's going down. We've touched the 100 monthly EMA ribbon on this Corona dump. And if we look, there's confluence with this trend to the downside. There's confluence with the 200 monthly EMA ribbon down here at approximately 2,000 for the S&P 500. And so, in my opinion, if this does indeed play out, I mean, this would be a massive, this would be probably one of the biggest corrections we've ever seen. 50% correction approximately if this does come down to the 200 monthly EMA ribbon. And it could even come down to this trend down here, this broadening wedge. So, or this broadening triangle, whatever you want to call this. So, it's just, in my opinion, looking at the charts, looking at, like, if we go to the regular candles, we've got the red dot here on Market Cipher B. I'm not trying to spread FUD or fear or uncertainty, doubt. Obviously, I'm just looking at the technicals. I'm looking at what the data is telling us, and I make my trades and I make my positions based off that. So today, actually, I got out of most of my positions in the traditional stock market. I was in some profits on a few stocks. First Solar was one, Boeing was another one that I was in on, and I sold them, and I'm just going to sit on the sidelines until some major price action happens or these play out, because obviously it just seems like lately things have been flat in the traditional stock markets. And obviously the reason we follow the traditional stock markets is because obviously they control everything. If the traditional markets tank, if they have a major correction, Bitcoin and crypto is also going to be susceptible to that correction. It's just inevitable. So that's why we pay attention to these charts as well. And if we look at and that's just the S&P 500, okay? If we look at the NASDAQ, it's looking very, very similar, right? We've already got downside on the NASDAQ. We've already had a red dot. The red dot's coming down. I mean, money flow is just so far in the green. RSIs are overbought. I mean, they've been overbought for a very, very long time, over a decade. And we haven't seen any sort of touches to the downside for over close to 20 years. I mean, you could see the dot-com bubble back here. We touched the 200 monthly EMA ribbon. Back here in 08, we also touched and broke the 200 monthly EMA ribbon. And since then, it's just been up, right? It's just been this massive uptrend. We haven't had any touches to this 200 for quite some time. So I think, in my opinion, we are due for some sort of major correction, as well as, the dollar is being inflated. I'll show you the DXY in just a minute. But, these are just classic bearish signals. And if we zoom out, we just take a look at the data, I mean, you can just sense that something is looming. And we can see that we have some clear support here. This was in October of 2018. We've got the Corona dump here in 2020. And we haven't seen any red candles since the Corona dump on on Heiken Ashi candles, right? So if we take this, right, this support down here, that would be approximately a 45% correction for the NASDAQ. So just another, I mean, these look very, very similar to me as far as the S&P 500 and the NASDAQ go. They're both in very similar patterns. The Dow Jones is also in a very similar pattern, right, to the S&P 500, where we have this broadening shape, right? And you could see that we've had the downwards channel, this downwards trend. You can see that we've made lower lows each time, right back here in 18, another one here in 18, the Corona dump obviously, and then where we're at now, obviously, look, we're getting a 15 on the DBSI for the Dow Jones. We've got a red dot here on the Dow Jones monthly time frame. RSIs are overbought. Money flows thick in the green. These are classic basic strategy market cipher indicators, that basic strategy to get out of the market, in my opinion. And obviously this hasn't confirmed yet, but you know, this could easily head to the downside. Look how overextended we are. I mean, there's clear support and resistance here. We could come down and maybe just touch this. Who knows? I mean, who knows how far we'll go down. But again, if we take a step back and we look at the data, same with just like the S&P 500 and the NASDAQ, I mean, we haven't had any touches down here at the 100 monthly EMA or 200 monthly EMA for quite, you know, definitely over a decade. I mean, the last time was 08 with the real estate crash, and then the dot-com bubble. You can see back here, we touched the 100 monthly EMA ribbon. And so, in my opinion, I think we're just due for a major market correction. You can argue that we just had one with the Corona dump, but I think that was a black swan event. I don't think that was something that you could predict, and I don't think that was really the major market correction, natural market correction that we have seen, you know, at least once every decade or about 10 to 15 years, like back in 08 and the dot-com bubble. So if we did come down and touch the 100 or 200 monthly EMA ribbons, I mean, the 200 is down here at about 18,000 points, and that would be semi-confluent with this downtrend in this broadening wedge, or this broadening triangle, whatever you want to call it. The low would be down here at 15,000 points, and that is actually also confluent with this previous lows down here in August of 2015 and January of 2016. You can see we wicked down, we touched the 50 monthly EMA ribbon down here, and there's clearly some support down there in that area as well. So, you know, this could, if this correction does end up playing out, we could wick down to this area. I mean, this is a very confluent area down here with this downtrend as well as this level of support. But I mean, that would be a massive, massive correction. You know, and obviously, if this does end up playing out, if this does happen, I mean, that's close to a 60% correction. That's massive. Obviously, cryptos would get destroyed in that time frame. If we go to the New York Stock Exchange, I mean, look, it's the same pattern. It's the same thing every time. You can see the momentum oscillator is coming down. It's over the 60 line. RSIs are overbought. You know, we don't have a red dot here, but I mean, it's very, very close. Very, very close. As well as money flow is in the green. I mean, these are classic bearish signals. We're getting a 15 on the DBSI for, you know, market cipher DBSI to the downside for the bears, as well as this broadening shape, this broadening pattern. We can see this in all of the indexes, right? So, you know, if this does indeed come down here, this would be a 50% correction for the New York Stock Exchange. The 200 monthly EMA ribbon for the New York Stock Exchange is down here at 10,000 points. And you know, obviously we did touch it down here in this Corona dump, but obviously it looks like we are at the top of the resistance here, right? Right, I just drew this resistance channel here, and look, I mean, we was back here in April of 2015. It's when it started. We had a little dump, right? We another touch here in February of 2018. We had a dump. Right? Coronavirus, obviously black swan event, we had a dump, and now we've just gone straight up, and it looks like we are at the top of this channel. And in my opinion, really the only way to go is down. I mean, there's just the risk of being in the market right now, being at this top channel, and the risk is just massive to the downside. There's more risk, there's more probability to the downside than there is to the upside, in my opinion. Now, if we go to the dollar, Obviously, we can see anytime the dollar goes up, that's typically when the markets go down, right? And we can see a clear double bottom pattern here. We can see an Adam and Eve double bottom pattern potentially here. And it looks like we're on the monthly. It looks like we're gaining some strength here, to the upside for the dollar, meaning it's being inflated, potentially inflated. And obviously, we've got some key levels here. I've been charting this with the Fibonacci. We've got the 618 up here at 97 and the 786 up here at 100. So those are key levels to look out for. But this could easily head to the upside, and if that happens, that's typically when markets tank. You could see that when the dollar came up here in where's the coronavirus? February, right here. You can see this is the coronavirus. This is February 2018. We had the dump in that time, right? And you can see that in 2018 we had that mini dump. And if we come back here to earlier times, right? Here's the 08 crash, right? In 2008, 2009, dollar spiked, inflation, and that's when we had the dump, right? And then similarly, back in the early 2000s, if we go to the early 2000s, right here as well, you can see that the dollar inflated, and this is when we had the dot-com bubble, right? It's at a high. So that's why we take a look at the dollar. Obviously, there's been talks of inflation and fear in the marketplace for inflation. So it's just something to look out for. And this is something that I just wanted to share with you because, and then the very last thing before I wrap things up here is for quarter two, we have futures contracts expiring on this Friday on the 25th of June. Quarter two futures contracts expire. In crypto and in traditional markets, we have quarter two is ending, obviously the end of the month, and I think that's why we're seeing a lot of bearish action. We've seen the price dip at the end of the month here because it's the end of the quarter. So, I mean, all of these things that I've been showing you, all of these data points, they're all confluent with each other. We're seeing a lot of data that's telling us that things are going to get bearish in the immediate short term or medium term. And that doesn't mean that I'm not bullish. I'm very bullish in crypto in the long term. So I will personally be buying the dip and continuing the dollar cost average into the marketplace and holding for the long term. But that being said, we just need to go off the data and show what the data is pointing us to and make our trades and make our positions based off that. So that's what I wanted to share with you today. That being said, if you want to learn how to trade, I have my Crypto Trading Secrets course coming out in the next few weeks or months. I'm currently in the process of creating it. So if you want to get on the wait list for that, you can go to escobarj.com/crypto trading secrets. And obviously I do this for free. It's a free course. So if you want to contribute to my channel, if you want to support my work, you can donate any amount of money or crypto that you feel is equal to the value of the information in this video, my course, or any of my other videos. And other than that, of course, if you like making gains in your body, your portfolio, in your mind, be sure to subscribe, share, hit the like, and comment down below what your opinions and thoughts are on the things that I've just showed you as far as the traditional markets and crypto. And other than that, stay fucking hard, and I'll see you in the next video. Take care.